Did Hindujas' banking immunity fail in India? IndusInd suffers its biggest blow in 20 years. On the morning of 21st May 2025, as soon as IndusInd Bank released its quarterly report, panic spread across the Indian stock market and banking sector. For the first time in 2 decades, IndusInd, long considered a stable and trustworthy private bank, reported a loss in its earnings. A net loss of 2,329 crore wasn't just a number. It was the shattering of a reputation carefully built over years by the Hinduja family. It was the collapse of the trust that millions of investors had placed in IndusInd's balance sheet. But the real question is, was this blow sudden? Or was it the result of cracks that had been ignored for years? The answer holds one of the biggest lessons of modern banking systems, something every investor and policymaker needs to understand. Today, we'll dive deep into this topic. But before we begin, if you are new to our channel, please don't forget to subscribe so you don't miss any updates. Now let's get started without further delay. If we closely examine IndusInd's journey, it's not just the story of a single bank's failure, but a reflection of the broader failure in modern banking, where beneath strong numbers, rot quietly festers. From 2019 to 2024, IndusInd scripted an ideal growth story. The bank's loan book grew at an annual rate of 13%. Its net interest margin, NIM, remained stable above 4%, indicating that the bank was earning well from its lending. Indicators like ROA and ROE proved that capital was being used efficiently. With gross NPAs at just 2.3% and a capital adequacy ratio of 17.4%, IndusInd was seen as a star bank in the eyes of investors. This numerical strength gave IndusInd a distinct identity, but sometimes the story behind the numbers is far more dangerous. In 2023, the number of retail investors crossed 600,000, up from 4 lakhs. The stake of domestic institutional investors also rose from 25% to 40%. All of this was happening while the banking sector was at its most competitive and digital banking was expanding rapidly. IndusInd not only demonstrated growth but also built a trustworthy brand image. But was all this shine genuine, or was something else happening behind the curtain? That question becomes even more critical when we understand that once investor confidence is shaken, it's incredibly difficult to regain. If we look back a little, it becomes clear that this crisis didn't emerge suddenly. In 2018, when the NBFC crisis deepened in India, IndusInd also got caught in its grip. At the time, risks related to infrastructure funding came to light, but neither the media nor the market gave it much attention. In 2021, through Bharat Financial Inclusion, a case of loan evergreening, i.e., issuing new loans to hide old ones, surfaced. It was dismissed as a mere irregularity. But these were the very cracks from which IndusInd's trust has now started to leak. Had these signals been taken seriously, perhaps the bank wouldn't be in its current situation. In the first 3 months of 2025, the situation began to change. Defaults started increasing in the microfinance loan portfolio. But even this was brushed aside as a sectoral challenge. This negligence is what led to the storm in the March 2025 quarter, something no one had anticipated. On 10th March, the bank reported that it had reversed 1,960 crore of other income. This meant there were serious discrepancies in previously claimed profits. And this wasn't just an accounting error. It was a failure of internal controls that had been ignored for a long time. In this reversal, 423 crore of income was incorrectly reported under Bharat Financial. 595 crore was attributed to ambiguous asset liability growth. 3,509 crore came from microfinance slippages, and 178 crore was reversed from interest income. 760 crore was shifted from interest income to other income, and 158 crore of provisions were reclassified as expenses. This wasn't just number manipulation, it was a failure of internal audit, governance, and transparency. While the bank's management continued to call it a one-time error, the market saw it as a breakdown of trust. And a crack in trust can leave a massive impact on share prices. Now the question is, what lesson should investors take from this fall? Warren Buffett's famous quote, "The most important thing in banking is how safe the loans are, and that's the hardest thing to understand," fits perfectly in the case of IndusInd. A bank whose balance sheet once gleamed, whose financial indicators were benchmarks, suddenly began to resemble a sinking ship. The answer is, sometimes data shows the surface, not the depth. And it's that depth investors must now learn to assess. Numbers can be attractive, but transparency and governance are the soul of any institution. There is often confusion in the market regarding low valuations. When the PB ratio dropped below 2 and the PE approached 10, many saw it as an opportunity for re-rating. But they failed to consider that this might not be a valuation signal, but a warning. The story of IndusInd Bank shows that one cannot judge a stock as cheap or expensive based solely on numbers. Transparency, governance, and management intent, these must also be evaluated. In the world of investment, the biggest losses often occur where trust is broken, not because of the numbers. And most importantly, the role of the Hinduja family in this story. Gopichand Hinduja and his family are among the wealthiest members of the NRI community. IndusInd Bank was the result of the Hinduja group's vision. The late Sri Chand Hinduja laid the foundation of this bank. IndusInd International Holdings Limited, IIHL, is its promoter and still plays a key role in the bank's operations. So when IndusInd stumbles, it's not just a crisis for the bank, it's a crisis of pride for the entire Hinduja empire. This case shows that inherited capital and brand value are not sustainable unless accompanied by responsibility, transparency, and foresight. This fall of IndusInd Bank also sends out a larger message: no matter how old, large, or reputed a bank may be, if it compromises on transparency, its reputation can crumble within months.
If our video has taught you something new, do not forget to like and share this video so that this information can reach others as well. Your likes and shares are a source of inspiration for us. If you have any questions or suggestions, please let us know in the comments. It will be our honor to answer your questions and listen to suggestions. And yes, if you like our content, subscribe to the channel and press the bell icon so that you stay connected with every new story. Thank you. GRT Business YouTube channel sources: news from various news agencies, opinion polls, and other public sources. We try to ensure that every report and summary is accurate and verified, but we are not responsible for any dispute or error. Our aim is only to provide you with accurate information.